everyone. It's Stuart here again. Welcome to the prop trade and our live our live analysis for the Canadian inflation date that's due in about 10 minutes time. So I hope you're all well. Hope you all survived yesterday. I was due to do a little webinar on not on the Bollinger Band and Stochastic. I was going to have a look at the VWAP and Heiken Ashi candles yesterday, but the Amazon WS or the AWS shut down the fragility of the data center. Apparently, it was the oldest and biggest of AWS's data centers in the US yesterday. It was no, apparently, again, from what I've read, I don't know if anybody else knows any different. It was no malicious intent. It was just one of those technical errors that happens. Obviously, we're very, very dependent on software and power and glitches in that, and rogue software, rogue fingers when somebody's programming something or updating something over the weekend or whatever it was. I haven't seen or heard any update on what's gone on there, but yeah, it had a massive impact on lots and lots of apps and servers, and so we didn't get to use our webinar yesterday, and I hope you're all recovered from it now. It looks like it's okay now. Let me just take you down. So this is what we want to talk about yesterday: the VWAP, the blue line here. It's the volume weighted average price, similar to moving averages. I get shouted at when I say that because it includes volume. It's anchored typically at the beginning of the day. This is what this one is a 3-minute average weighted price line, basically. So for the small here on this particular asset, which is dollar CAD, we've been very, very positive above it from early Asian trades. Our morning start was all the way down here at 140.27. We've been all the way to 140.66, and then we turned negative as the European session got underway, and the dollar came back down against the CAD. The CAD's on the front foot in running into this inflation data, as I say, which is due in 8 minutes' time. So positive, negative, big red candles. There's the positive one into the VWAP. We wait till the VWAP because we could have bounced from that. We didn't. We broke through it. Then we broke through it. That would have been your clear entry there at 140.49 here on this 5-minute chart. So that would have been your clear, strong entry. You could have entered earlier. Why do I say clear, strong entry? Well, it's the size of the body of the candle is very big. We've got no upside wick. We'd already been red from 12.25. We'd gone into VWAP. VWAP was very flat, so therefore, if we broke it, it would have taken us lower. We did from here from 12.05 quite strongly till till half hour was up. Retrace, but didn't get back to our entries, and then it's short again. So if you got out there on the change of colour from red to green, you wouldn't have made very much. Looked like it was quite a positive turn there in that 5-minute chart, didn't it? It didn't happen, and then we've turned positive, negative again here at 13.05 or 5 minutes past the hour into the data itself. So lower again. Lower the day 140.40, or lower the European session anyway, 140.40. Remember, the low of the Asian session was 140.27.8. Actually, we were sort of pivoting through there, weren't we? That's probably an easier target, 140.32 to the downside. So see if that gets tested when this inflation data comes out in a minute. If we just have a look at what's expected today, I'll come back to the calendar later on. We'll just focus on the imminent data, possibly as high as 3% for the core data has been touted about. Remember, the Canadians issue 3 readings. They're good to call it the trim, the median, and I always forget the other one. I can't remember. Anyway, they do an average of the for the CPI for the Canadian inflation reading. Remember, the loonie itself has been under very much pressure over last week. I was just looking back to last week's trades. We had 8 or 12. We had 12 trades last week on the loonie. Most of them were positive. It's been very weak. If we just use the dollar as an example, remember the dollar's weak, but if you look at it against the Canadian dollar, very, very strong. This is the daily time frame here from the 18th of September. We've had positive days. We've sort of topped out we looks like we're topping out here when on with the Heiken Ashi candles here. We finally turned red there on the 17th. So it was a rally from the 18th of September to the 18th of October before we turned red on the Heiken Ashi. So strong moving trend moving up, and we're green again today, consolidating at this 140 area. Breach above 140.50 takes us higher. But you can see that again. I just pick another currency, a pound CAD, also very strong as the dollars, as certainly sterling's come back, and the pressure on the loonie has increased quite significantly. So big, strong week last week. We had some good moves on pound CAD, and I think I finally lanced the that is the pound CAD pair story from a long time ago. Pound CAD was one of my bogey pairs. I've certainly fixed that in 2025, mentally, subconsciously as well. Oh, anyway, sorry, my head's too big here, isn't it? Let's bring the chart a wee bit bigger. There we are. So the pound CAD, as we're going to obviously concentrate on the CAD pairs across our three strategies here. So here it remains positive on the Heiken Ashi setup on the end of day basis. We go down to the 5 minute trend moving. Obviously, it's weak, and it's still you'd have been short from here. Certainly added there at 10 past the hour. And if you wanted to close out, you want to take the risk away from the anticipation of the data. Obviously, all well and good, but that's this VWAP low here from the Asian session is within striking distance at the moment. So we're still very much short there on that 5 minute time. Now let's have a look at the other layouts we've still got working here. Thanks to Trade Locker, I lost all my platforms in an upgrade. So this is the moving average. This is the VWAP and Heiken Ashi setup is very much a trend following strategy. This one here, the Bollinger Bands and the Stochastic, is very much a mean reverting strategy. So here, 12:30, this triggered a long position here. Didn't quite get to target. You can see here on this, just using the 5 minute chart, but you can see the trend is down. So the trend, as I say all the time, the power of the trend is overwriting the mean reverting strategy. So here we've reverted to the mid Bollinger Band, and then it's gone lower. We've reverted to the mid Bollinger Band, didn't quite get there, then reverted lower quite significantly here. So that long position there, again, if this was all automated and you were you would have triggered a lot. It would have triggered along there. In fact, it might have only triggered there, but technically it's there from that point there, 140.44. Trying to target the mid Bollinger Band. It didn't happen. And then it reversed aggressively. Stop loss would have been below here initially. So you might have been stopped out on the first 5 minutes anyway on that one, because look at that. That's moved down. So you've got to be stopped out anywhere during that position there if you'd had your stop loss down here, which it probably would have been. So you'd have been stopped out there anyway. It's reversed, and then we've crossed back again. So technically, going as a continuation trade, you could have then taken that short there on that one. So at that point there, but that's like phase two of this strategy. The mean reversion didn't work after 20 odd minutes, 25 minutes, and then it's gone short again here at 13:05, bit like the Heiken Ashi one. And then the other layout we have was still 2 minutes to go. So now quickly, crossing exponential moving average. Remember, this uses the 5 to 9. So long and then short. You can see on the hourly time frame. So the hourly trader would have has just gone short now, actually, as this hour is. In fact, it hasn't actually gone short yet. So let's go back to the 5 minutes. So we're looking like for like. So you can see here, this is very much short. Short again here, retrace, didn't cross 20. Remember, we've got to get above here to go long. That would have been a failed long position there. It's immediately gone, stopped you out. So you've gone back with the trend. You could have waited until we provided a new low here. So you would have entered there at 11:55. It's gone short. Again, it's retrace, got you out here at 12:40. So you've gathered that. Then you've gone long, short again here at 13:05. So all three strategies would be short dollar CAD coming in to this data. And there we go. The data is obviously just broken. We've gone even lower. Let's see the spread moves there on these numbers. Remember that low area we were talking about the other day? from so there we are. We've already gone through that 140. So I'd be quite happy to take that out now. Take at least half of my position off this short one I'd been here because we're now producing a new low for the day. As you can see, there's um, our low, our opening low here, as we mentioned earlier. In fact, let's just do it completely. No, yeah, that was yesterday. So this 140.30 zone, I'd have taken some profit off that from there to there. Thanks very much. Now I'd have my stop loss right at the top of this 5 minute candle now, with the other 50% of that trade on. So I've made to that 130 area. As we actually, let's go back to the one we marked it on. It was the was it the VWAP one? I can't remember now. Which one did we mark it on? Anybody help me? There's nobody here to talk to me. So there we are. That 140.32.3. So we'd have been out here, half of our position from here, and then moving our stop loss down. See the width, see the spread's got pretty hefty there. 140.29, 140.22. That's pretty hefty spread there on the Heikin setup. If we look at the anyway, so we're still short. So we got through, there we are. Thank you very much, and let's have the stop loss closer to the action. With our other layer. Let's see if we get a reversal with our Bollinger Band stochastic setup. So we've burst out of the bottom of the Bollinger Band as you expect, but this is what happens when you get data and you get an explosion of the Bollinger Band. You've got to stay with it when you get a squeeze in. We had a squeeze from the top. We didn't have a squeeze from the bottom, so it's not a proper squeeze, but that's the first touch. We're looking to go long now, this strategy, but at the moment we're still short. So remember, we got in earlier on, and here, basically, wasn't it? We said we'd got in. Let's lost my line. So we've got in there. Our low for the day, which we didn't mark on this one, was around about here. This one, what did we see? It was 132. So we got out at got in at 140.43. We got out at 140.32 thanks to the data. And now we're just, I'll be, this is moving lower again, 140.20. So if we look to the left, where are we going to, excuse me, where are we going to find next support? Well, here on this time frame, on the 5 minute time frame, you can see if I squeeze in there, where's the next sort of congestion zone? Well, there's a bit about where we are now, aren't we? 140.20. So I might close out, not get too greedy. So I'm out at 132, and I'll probably be out here. See why I'm saying that area there? You can see that it's not great. We could go the thicker is there 140.15. But do I want 5 more pips? That's much more of a congestion area here. This bit here, this zone through there. So we do an average of this channel here. I'm sure you can all see, but let's just add some spaces. So simply that channel there is what we're looking for. We've already got into it. The top there is at 140.18. We're already into it now, so I'll be happy to take a second part of that position off there, the last position, and there I'll be probably done for the day, having had that movement. Simply because that's the big news of the day. Obviously, save anything that Trump might say. So our first target would have been through here. Again, all on the same time. All this is pure price action trading, guys. Just where the market finds its resting point or its extension point. So the level is there. See that? That's what I've done. I've just eyeballed that. I haven't actually put that with any sort of technique. And then what I do, I tend to look and say, oh, is that a round number? Is it a key number? Well, 140.15 was low enough for me. I actually put it on 140.13. You can see, greedy wise, yesterday we went at 3 o'clock in the morning. Yesterday we were at 140.05, testing the 140 range. Will we get down there today? Quite possibly, but I'm happy. I've taken off. This has been short. The long was a fail. Remember the strategy? We went long and got stopped out. We entered. There's a continuation trade now. Down again. Size of the candle matters. It was a continuation. We'd had a cross again of the stochastics here. There on that candle there. Happy to go short, having gone long. So that was a losing. Got that back. So we got in 140.32 it was, wasn't it? We put on there. 32 it was, wasn't it? etc. And then I'm happy to close that out. I mean, it may go low, it may not go low. 140.32. We took 10 or 11 pips off that, and then what this one 15 we said, didn't we? So another 10, 15 pips on the spike into the next zone area. Okay, haven't got through here. I mean, that could have been a closer area, but this was a bigger area of congestion, wasn't it? These were moving areas. You know, you might have had your first target not as low as, sorry, lower than I'd put on there. So if we just go at this again, let's take this up the time frames. Again, it's regardless of how you trade, my friends. But you can see here at the 10-minute, there's more of a sort of turning area around there at 140.26.6. So our first target might have been there, but again, you can still see even on the 10. You see how that box, this congestion, this low through from the 17th through to the 20th here, Friday through to Monday. Nice low area pivot, sort of average of that box zone. We sort of got into, didn't we? So, you know, that line we put on was at 140.13. We talked about getting out at 15, didn't we? It's where we actually said we were going to get that out because that's not, you know, I like fives and zeros. So that's our actual sort of trade zone. So that's the five. That was the 5 minute and 10 minute. Let's have a look at the 15 minute. How different would the 15 minute have looked? Well, you would have been short here, and this is sort of triggering a long position there. Same time, 12.15 didn't work out again. Stop loss down here. We would have been stopped out here, and again that hasn't continued, has it? We haven't had a continuation here on the 15-minute time frame. So perhaps we wouldn't have gone short on that. The 5 minute has worked out really nice given the volatility, given the data. Obviously, the thing you need to check with yourselves is obviously how, you know, when and how you got out there. We saw the spread widening as that news came out, but we'll see. Anyway, we haven't actually looked at the news, have we? But we've seen it's benefited the Canadian dollar as this US dollar has gone down. So let's have a quick look at the data itself. What that's looking like. So that's Monday, Tuesday. It's got everything on now, hasn't it? Where are we? Tuesday, Canadian. There we are. That's the common, the core, the median, and trim. That's common. I'd forgotten about. So 2.7%. So it's hotter than expected. Median 3.2%. Trim 3.1%. So again, this story that keeps reverting around, and again coming back to the south of the border and the Fed, you know, their insistence on the, you know, the impact of inflation. We haven't seen it through yet, and this is what we are seeing here with the Canadian dollar. There's some weakness we've seen for the Canadian loonie, you know, maybe feeding through to import prices as well. So um, this could have been having an impact as well. But the situation with its nearest neighbour, its southern neighbour, and the situation with the tariffs perhaps beginning to bite 3.2%. So, you know, much stronger than expected. Last month was also revised higher by 0.1 of 1%, 3.2%. The common is also high by zero point 0.2 of 1%, 2.7. And the week and the monthly for September, the core 0.2 of 1% from flat last time, and 2.8% for the core. That's a real bit of an eye opener. Core coming in at 2.8% for Canadian inflation data. Hence the move for the Canadian dollar, maybe prompting moves from the Bank of Canada, or not prompting moves from the Bank of Canada, to, you know, almost nailed on that the Fed will be moving in October and December. Obviously, all eyes now really towards the January meeting. The December and October meetings are sort of somewhat nailed on, but obviously things can change next week or the next couple of weeks. All the central banks announcing their changes or non-changes. One that certainly won't be changing with the new prime minister is the Japanese yen. If we look at this, it will have moved quite significantly We can see if we just look at the hourly chart from the confirmation, well, what seemed like confirmation late yesterday of the first female prime minister, ultra conservative, or that's how she's been touted. Margaret Thatcher, the Asian Margaret Thatcher is what they're talking about her here in the UK press. So the yen has weakened significantly, and obviously we had another leg up here for the Canadian yen move on the Canadian inflation data. So that's been a trend that's been running from late yesterday, from 107.50 to 108.50. So a big full 100 point move for CAD yen traders to the upside. In the overbought area here from stochastics, way outside of its Bollinger Band, but doesn't matter. That was major fundamental news that has moved that higher. So just keep your stop loss trailing up behind you. That is trending to the upside, as will all Japanese crosses. We'll come to Japan, the Japanese yen in a minute, but say CAD very much in focus. Pound CAD 187.50, another one we've traded quite a lot. And there we go, the CAD bid on the inflation data. So CAD yen down. Okay, so I didn't see you yesterday. So last week, I hope you. Let's just put it up on the Discord group. We had another losing week last week with some big numbers. It was all to do with the way I report as numbers, not so I should probably report it as percentages, but a second losing week in a row. So first time that's happened in a very long time. First time in 2025, we had a losing week, week 41, and week 42 last week was also a losing week. 172.25 points we were down on the close on Friday. All of last week's trades were closed. What was more frustrating or more annoying, the thing I talk about is managing your risk all the time. But when I looked at the numbers, there was only 21 full risk position close. Obviously, I closed them in partially, what have you, but 21 closed positions, 17 of those trades were winning trades. 81% win rate, and you still lose points and lose money. So don't believe everything you see. It's not all about win rate. It was to do with the size of the loss that I encountered, particularly on the DAX Monday. We lost 2.3%. I try to keep my risk round about the 1.89, 1.8, 1.879 sort of range. The DAX trade moved really quickly down, and we lost 567 points. It was 2.3%. We never really recovered from that during the week. I had some really positive and good forex trades. We had a monster winner on from a forex point of view on what's that big one? The pound Kiwi, 160 odd points on the second half of that trade. It'd been open a while, but a big winner for the pound Kiwi from a points point of view. Obviously, again, it moves a lot from a pips point of view, so you've got to compare like for like from a percentage point of view. So from a percentage point of view, again, it wasn't too bad. This 172 points. But it was a losing week, nevertheless, and we had a Nasdaq that lost 158 points as well. There we go, standout Friday, 350 points plus on Friday, but it wasn't enough. So we are 727 points to the red with 3 weeks of October down. Still 2 weeks to go, and we're currently back in the market. We're long Dow and long the Nikkei, long the S&P 500 as well. The Dow and the S&P 500 target ones yesterday, so we're up 100 odd points so far this week. And then we've I closed the Aussie dollar trade from last night ahead of the stop loss. Look at it, it's reversed basically. Look at the Aussie dollar. It reversed. It went up a wee bit after I'd opened it, but it's look at the hourly chart. Yeah, we opened it around about here last night, wasn't it? It was here. There we are. So yeah, around about here, 60. I can't remember what, 65. So it moved ahead, but and I woke up this morning. We were out of the money. And then there's the big 6 o'clock candle. I didn't close it immediately, and I think I got out at 65, 85. Yeah, it was around about here before I was actually taken out, or 64, 87 or something. But it was very much against us. The stop loss might have been hit. I think it was 74 or something. But anyway, I decided to get out because it was one of those overnight trades. So that's a losing trade, 20 odd points on that one. 27.9, yeah, 64.87 we got out. The stop loss was a wee bit lower, 64.74, so it didn't doesn't actually hit that, has it yet? But 64.77, so now it's got within a few points of stop loss and moved up, but we're still out of the money, and we're more or less where I got out earlier this morning. But yeah, really, that 6 o'clock candle was the hourly candle was the key one. I look at the hourly when I put these on, guys. It's obviously based on the end of day basis. So that was yesterday's strong candle. So we got in around about the top of the day. Uh, and then when I sort of look at the charts at between sort of 6, 7 o'clock in the morning, I go down to the initially I go down to the time frame. So yeah, the initial, the first 4 hour candle after I'd placed my position was a big engulfing negative one. So if I'd looked at that at 6 o'clock, I'd have probably got out at that point there, 65.03. But it was really during this candle that I got out, and it went down. So the 4 hour was negative. The 1 hour was, negative as well. There's that move up. There's a move, and also, I have a look at the 15-minute before I make a final decision. So the mood down was still very much in flow. See the 15-minute there? We'd moved up earlier in the evening, and then it'd been down all overnight, all the time I was watching it this morning. There's that 88. It was around about here. I think I got out around 8 o'clock, 8:50 or something. Um, so it was continuing to move down, and it didn't bottom out until 9:15. But I was already on my way out at 9:15. So, and it's come back a wee bit. Or it has come back a wee bit, but still out of the money from yesterday's entry. But anyway, so that's my manual process I go through on these overnight end of day trades. If anybody's interested, of course. Anyway, more. The scanner will run, and we'll see if there's any more tonight. So a look at the moment. There's a CAD yen position potentially, Euro Oz, Euro yen. There's quite a lot. Euro dollar, interestingly. Short Euro dollar, third day down. 116.05 might be your entry. We're looking at 115.56 at the moment. So we're looking for 50 pips to the downside. Dollar up against the euro. Elsewhere, the more conservative system has euro, yen, pound, yen, and the DAX, interestingly, today. DAX to go long today, potentially, from where we are, 23,433,444. So I'm quite exposed to the stock markets at the moment. But I do like the DAX. Had a strong day yesterday. Very strong candle yesterday. Sorry, I'll show you what I'm talking about. Strong as they all did. Let's go back to this. So that's looking to me, it may go along. But let's just go through my risks out there at the moment. We are, sorry, that's top of the DAX. There's the DAX on the end of day basis. So there's that strong, powerful, having moved down for over a week and a half. The DAX got as low as 23.70. That was our losing big points last week. Strong day yesterday, back over the 20-day moving average here, the midpoint of the bond ground. Strong engulfing candle yesterday. Has been in there last night. We'll have a look and see what that's looking like later, but that's looking a bit interesting, shall we say, for the DAX. The S&P 500, these are our, you know, charts because of the caps on there. But this is our long position from on Friday night. We went long the S&P 500. Stop loss is down here. It's now rammed up. There's target one. It's got to. It hasn't really moved any higher than that to the upside, the S&P 500. But we are round about, back towards the all-time high area. We've got a crossing. I might close out the second half of that at that level as well. But stop loss is now at entry, so I can't lose on this anyway. We made, what was it, 24, 32 and a half points. So if we close this out, another 32 and a half points. That's looking like maybe question mark on that one. The other one was the Dow. The Dow triggered again last night. So again, the Dow from here. So I've got a position and a half on the Dow. Got to target one yesterday. That was 116 points or 232, but we took half off, so 116 was being banked. We can't lose on that one again either, so another at least 100 odd points on the Dow, guaranteed. And we went long again yesterday. There's a stop loss from yesterday, and I can't remember. I think we got in around about here yesterday. I can't remember, but my second area or first target for the new trade and second target for the existing trade is around about here, um, this area here, and that came about. If we go to the daily, you can see the big shakeout, the Trump effect on that Friday the 10th. So I did a quick um, uh, Fibonacci of the extent of that move up and down. And we saw that we got to the key 78, or not the key, but the 78 fib level, where our target was. And the extension took us a bit higher to here to 48,250 basically. Uh, so target area was around about this 47,000 plus. So it's 47,250, whereas the 1.6 fib extension of that last leg down was 48,250 more or less. But obviously the Trump factor, we can't ignore, but that was a peculiar sort of risk on. And again, just even if we move this up to just the bodies of the candles, it brings it down to 47,700, and that's second target split between the previous all-time high. So yeah, and where we are now. So that's why that target is there, 47250 for target two on the Dow. See how that plays out. All change very, very quickly, obviously. We still got strong, obviously, earnings season. The numbers that have come in have been better than expected. 85%. I say this every quarter. 85% of those that have reported so far are better than the Wall Street analysts. So why do the Wall Street analysts bother? It always comes out all the same. But sentiment, momentum, the herd mentality. Just don't fight it, my friends. We've got some significant companies. Tesla report this week. I think it's tomorrow. Tesla report their numbers. Apple had one of its best days in a long, long time yesterday, up 3% yesterday. The stock markets were all positive yesterday. Just going back to last night, a percent move we had in the S&P, 6,735. The Dow was up 1.12%, and the Nasdaq yet again the outperformer, 1.32%. But we've got no skin in the game on the Nasdaq at the moment. The other one we are long is the Nikkei. We got this right up yesterday. We got in at, I can't remember the actual numbers we got in at. I think it's on here somewhere, isn't it? Yeah, Nikkei, we entered at 49,687, so right at the top of the market. 49,687, yeah. And we're sort of a little bit out of the money on that at the moment, but that's looking quite strong. Again, based on the new Prime Minister being very, um, unlikely to see any change or let the Bank of Japan start to move interest rates up, as Udira has been talking about, getting a bit more hawkish. But new all-time highs again for the Asian markets. I should have mentioned it as well yesterday. I didn't see you yesterday, but happy Diwali to everybody as well, wherever you're all celebrating. Lots and lots of fireworks last night in my neighbourhood here in southeast London, and I'm sure there was lots in northwest London and lots of parts of the world. I was reading this morning something on Reuters saying there was a smog in downtown Mumbai this morning because of all the fireworks from last night. But we're celebrating. Take care, my friends. Peaceful celebrations to everyone, and hope you're having a great week because many markets are closed for the entire week. If we look at the calendar, you see here India still closed. Yeah, Punjab early close today. So that was today. That's the main data for today. The what's yesterday? What's Wednesday? Monday. Tuesday. That's today, 21st. That's the real main data of the day. Um, just with regard the US government shutdown, there's chatter that the CPI data from last Tuesday may be coming out on Friday. Obviously, keep your ears posted. Obviously, the private payroll data the private data will come out anyway. It's just the federal government data. There's chatter last night as well from Kevin Haslet, shortlisted um, Trump ally for the Fed chairmanship, that they will come to a deal this week. I don't know where he's got that from, but obviously he's very close to what's going on. He started that rumor last night, so keep your ears peeled, keep your watch the news flow, because all of a sudden there can be a big dump of US data that spikes things, and it could be the trigger, the catalyst that many people are waiting for, both for a sort of a correction in the stock market and potentially correction in the gold market. But we'll see. As I say, we're using a nickel. Well, as a big example, because it's what you can see here, the S&P 500 continues to move up. Nasdaq here on the difficult, it's Friday pre-Trump about not getting the peace prize, and pointing the finger again at Beijing. That's all sort of cooled a wee bit. I was saying yesterday when the Australian Prime Minister was in the White House at the press conference, how much he respects Xi and he gets on with him, and they won't invade Taiwan because I'm president, and he doesn't want to invade Taiwan. That's not going to happen. Blah blah blah. We're the biggest military in the world. We're the biggest economy in the world. Blah blah blah. We're making so much money from the tariffs. Obviously, talking a wee bit earlier, I would argue. But anyway, so as you can see here, stock markets continue to move higher. There may be a healthier correction coming. That's all I'm saying. But at the moment, stay on your surfboards, my friends. And as for healthy corrections, we just have a look at the mighty gold market. We are all crashed quite significantly today. It's down more than I thought it was. But we're still holding 4,300 early in the day. We're now approaching 4,200. So that's some crash. There's obviously some sort of worry now here. So 4,300 has been given up, and we're now back to 4,200, $15 above that note, 4,000. Very strong move. We've been overbought in this very, very strong rally all of September, all of October so far. So 4,200 is this looking like a support area. If it gives way, it could give way much more quickly than it rallied, my friends. So just be careful on that. But there's some significant reasons we've got this big rally in the gold market. But it may be, places like Russia, China may be liquidating some of these moves. Obviously, Diwali's happened now. And again, it's a psychological thing. Diwali's a big gold seasonal positively for the gold market. We've had that run up. Like the wedding season in Asia is a big driver for gold jewelry and gold bullion. But perhaps people have sold as much as they're going to sell, and big correction. So watch this. This is a big down day. So at the moment, but we had initially one on the 17th. We then bought it back on Monday, and now we're down. So chill off on the gold market. Tuesdays and Fridays. I've said this before, to you. Tuesdays and Fridays can be quite significant for gold markets. That's just again my analysis of daily candles on this market. If I just have a look at my other platform here, gold. Yeah, it's a big engulfing candle on my other platform there, but. Mm, Yeah, watch that one. Could come off quite quickly. Obviously can fall quite aggressively. But at the moment, maybe just shaking out weak holders. Those have gotten it at 4,300. Those have gone at 4,200. Getting tested now. Anybody that's bought above 4,000 is still very much in the money. And the 20-day moving average now, you see then midpoint of Bollinger just above the key 4,000 level. So that's the next big support. If 200 gives way, we could be quickly down to 4,000. So watch this space, my friends. But gold remains big. Silver similarly went to $53 last week. Here we are, $54, in fact, on Thursday. Sorry, Friday. Well, yeah, Thursday, Friday. Big sell off on Friday. A bit of a bounce yesterday, but down again today and under $50 silver. So significant shakeout in silver and the gold market. But we've had a fantastic run. So, some profits certainly getting taken off the table. That makes absolute sense in these very, very bullish markets. Bitcoin, unfortunately, getting clobbered a wee bit. 108 at the moment, so the 112 area, I've talked about all the time, has given way quite significantly. We're struggling with 110 at the moment as well. So Bitcoin under its 20-day moving average since the 10th of October, and all the way down to this 105 area, 101 area on the 11th following the president. Rallied a wee bit, but couldn't get over the 20-day, that flat 116 area, but we were over 112, so 115, looked okay, and then we gave up the 112 and came back down. Had another go at 112, and we didn't quite get there over the weekend, 111,000. So this is looking relatively weak for me, Bitcoin now, on this daily basis. You can see we're running out of steam a bit, so it's maybe needs to test back to the 105 area again, and then the 106, 107 channel we had earlier in the year, and then into the 100,000 level at the moment. But certainly been under the 20-day moving average since the 10th of October, and no sign of that getting breached anytime soon at the moment. But volatility is what it is. It can move quite quickly, but interesting new recent lows being posted in the last few days here. You can see this one here on the 11th, and then this one here on the 17th. So if we look left again, where do we go down? Well, you see the low got lower than that, didn't it? And we went into 101,000, and the key 100,000, purely from a psychological point of view, sits round about here, doesn't it? That support there, 100,000 on there. Let's actually put it on as a full line. So I want to stay on because of leading platform. So anyway, 100. 1, 2, 3. There's 100,000 on Bitcoin. So we haven't actually been into it, and this moved lower. Found support here. So that looks like that could easily get tested to the downside. So we'll see before we get back to new all-time highs over 126 now. So Bitcoin, crypto generally under pressure as the dollar's come back a wee bit. Oil can't get a break. WTI 57.75. Again, another one. Stay on your surfboard, monitor it. That 56 area we talked about is being tested over the last couple of days. Weakness again yesterday. Up a tad today. Brent 61.50. Under the or still above the key $60 handle, but that's Brent's major support area. But may see some buyers down here, guys. It's moving lower, but at the moment, no sign of that turnaround just yet in the oil market. And let's just have a little major dollar crosses. So as we say, euro dollar 116.10, looking to potentially go short, and there we are. You can see that minor rally rejection there on Friday. On the daily, yeah, that should have we triggered a short on Friday, but down again yesterday, and it's looking my system is triggering on an end of day basis to go short tonight. But as you can see here, from a mean reverting strategy, it's crossed there on the 14th. It's got to target 1. It's been rejected, so that would be certainly that's that when I was saying about the there we are. That's it would. I mean, it's Friday night, wasn't it? But that's certainly a rejection of higher prices, a rejection of the 20-day moving average. Certainly, convert an extra short there, or potential short there. But obviously, the here for them from an end of day basis, the stochastic is still moving up, so it's not enough to go short because we're waiting for another. But it looks like we could easily move down to test 115.50 again in the next few days. We need to move back over 116.67 at 20-day moving average. You see that? Well, that's a bit of a sort of pivot point as our mean regression area on the euro. So dollar, yeah, very much on the front foot. Here, dollar CAD, obviously, we just had a look at that. We're not used to looking at that. Swissy, 79.50 again. So dollar's come back the last couple of days again from a weak run last week against the Swiss franc. But up again today, so having a good day. So watch, where are we? 79.50. 20 days sits at 79.67, so still way below .80, but up from these lows, which looked like we were heading for at 78.50, so 100 full basis point above that at the moment. So watching that one. So dollar having a good day against Swiss franc. Not such a good day against the CAD we've seen because of the inflation data out, that hot inflation data out of Canada. Euro, it's having a good day at 116.10. Aussie 64.90, so back under 65 for the Aussie. Sideways action over the last week or so. There, remember we had Albanese, the Prime Minister, in Washington yesterday, doing a deal on the rare earths that Australia has, and the fact that the value added is going to actually take place in Australia. So they're going to some significant US investments for the processing of these rare earths in Australia. So value added in Australia itself before they're exported to obviously the United States, principally key partners. And then lots of chatter about the OZOC deal, the OZIC. I can never pronounce that properly. The submarine deal between Australia, UK, and the United States. Again, obviously, it's all to do with Asia, all to do with Xi and China and the big APAC summit that's coming up at the end of the month, and this scheduled meeting that Trump and Xi have. It still could not happen. That would be a major shakeout for the markets, but 50 odd percent tariffs as the president is banging on about, potentially 150% as he says. Let's see. That's not going to happen, in my humble opinion. But anyway, it's lots of good games, isn't it? Sterling 133.85. Again, similar move to the euro there. Looked like we were moving up last week. Break of the 20-day moving average there on Thursday. Friday we came back down. Yesterday we came back down, and we're down again today. So rejecting that rounding, bit of a rounding top there, around about the 20-day moving average. The stochastic here, the K and the D line still moving higher, so you'd have gone long there, got to target one, and again rejected, so not to target two, so perhaps out if you got your stop loss a bit too tight on that one. It's interesting to see what the Heikin Ashi looks like on that one on the daily basis. So that's still positive, big rally up, but again the VWAP there on the day basis, so positive, still positive. Heikin Ashi traders. And what's the moving average, the crossing moving average doing? Still massively positive from Friday's big leap up, but rejecting that yesterday, coming out. So support the 20 days right on the where the 9 and the 5 is there for the cable rate at 133.78, rejected on 33.85 so far. Oh, it's 5-minute times. Something day left. That was the daily. There we are. So still that short again today. So that would be short now, having moved up higher. There we are. So it's a similar pattern. So that is short. That daily as well. They normally follow the it's the 5 minutes. It wasn't a daily. So Heikin Ashi on the daily, it's turning negative today. There we are. So that move up has run out of steam after 2 or 3 days. Still positive yesterday, but out today. So the long is closed out. Now that's looking to go short as it's we'll see what it's like. Certainly out of the long position there. Heikin Ashi trades. And you see that support there, 133.15 on that. So let's just finish with dollar CAD because that's where we started, isn't it? See where we are on let's do all three platforms. So 5 minute
As we said, we were out. Well, we said we were out, but we went short. No, we didn't. 120. That was our first target, wasn't it? 132, and then we said we got out at 15. Was our 18 was 15. Interestingly, actually right in the bottom there on the making actually candle. So they were the two levels we were getting out. Well, we had actually done, I know you wouldn't perhaps got that. Oh, yes, you would. There's that box we talked about on the other one. So the 40, 140, 15 was the second target. And now we've bounced back up from that. But still, what? We were in and out. And we're not looking to. The main one was our stochastic on the 5 minute. So there's the big move down. There's a box. Remember, I've lost all the drawings because that's what it's doing at the moment. It's done my head in. So that was that move down. There's that move down. There's that cross there. So this one, whilst we've been away, would have gone long here. So that's gone long now. There at 13:40. So some just 10 minutes, in fact, after the date, it's reversed. But it's petered out, hasn't it? That's not looking great, to be honest. It's looking like that's going to peter out. So um, stop loss was probably I'd have the stop loss. Well, it would have been down here. I'd have it here now, but that's looking quite weak. That rally up with speed trades. We'll see. So stop loss here, entry here. Currently in the money, just about. But we made most of our money on the way down to 140.15. I can't remember what we said. We had that at that continuation short rejection of that, but you can see we're still there. So if this crosses back down, this is still a continuation short. So if we get across here, because I'm going to go in a minute, in the next 10, 15 minutes, that would be another short position, and the long closed out. Whether we're in the money or not, we'd probably have to lose on the long for that to then these to cross down. But we'll come back to we'll check that later. Yeah, that pans out. I'm going to leave that one on there. And the other layout, the crossing exponential moving average strategy was short, wasn't it? As well, understandably, and then added up. There's the same target zone on the 40, 15 there. You see that nice and there it is, right at the bottom. Call that right at the bottom, that second one. And that's looking to try and go long, but you can see we haven't crossed. It's shorting with that strategy just yet. Again, rejecting the 9 period. So we're still aligned to the downside. We've flattened out a wee bit, so this could easily move lower again. As we said before, that took us to the 40.15. Obviously, the next level is 140 itself. So we just leave you with a big fat round 140. See if we get to it today. 140. It's a wee bit further away. It's a bit further away there. It looks down that 5 minute time frame, but haven't got to it. So the low was 140.05. So perhaps another 10 pips to the downside. We'll see now where that goes on that one. So let's leave it with the one we were looking at, which is the mean reverting strategy, which is a Bollinger Band as a stochastic setup, and just see if that long plays out or not. Okay, take care, everyone. I will see you tomorrow. Tomorrow is what are we? We are Wednesday tomorrow. I can't remember what it was scheduled. Not a lot, I don't think. I might do the Ike and Nash in VWAP webinar tomorrow as well. But I'll also let you know tomorrow. There's no questions from anybody. There seems to be these days. No. I will leave you in peace. Have a good Tuesday. Stay safe, and leave you with a review that inflation in Canada is hotter than expected. 2.7% for the core, for the annualized number, and the headline median number, which is going to grab attention, is 3.2%, up from 0.3% and up from 3.1% last month. So take care, everyone. Stay safe, and may the picks be with you. See you tomorrow. All the best. Bye bye.